What if I told you there's now a way to invest in Bitcoin? Without the wild volatility, with built-in yield, and tailored to your exact risk appetite. Michael Saylor just unveiled MicroStrategy's secret weapon, and it's not just bullish, it's brilliant. But here's the kicker. Most of Wall Street still doesn't understand what he's building. In this video, we break down how Michael Saylor is engineering the most innovative financial architecture around Bitcoin, bridging the gap between traditional finance and the 24/7 crypto economy. And the results? They're already crushing it for investors. But will this finally make Bitcoin unstoppable? Or are institutions about to hijack the very thing meant to set us free? Stick around. The deeper you go, the more controversial it gets. Saylor starts with a truth few dare say out loud. Most of the world still can't access the crypto economy. Despite Bitcoin being a $2.3 trillion asset, it's out of reach for governments, corporations, and even sophisticated investors who simply can't stomach the risk. So what's Saylor's move? He's refining Bitcoin just like crude oil. Some of it becomes pure kerosene, clean, stable, safe. Other parts, high-octane rocket fuel, and he's serving it to the world on their terms. MicroStrategy now offers a full suite of custom-crafted Bitcoin-based financial products. Convertible preferred stocks for risk-averse investors seeking predictable yield, high-yield instruments for those chasing upside, and of course, MSTR common stock, the volatile core that captures the explosive excess return. Saylor is literally stripping down Bitcoin into different flavors. Some with safety nets, some with leverage, and some that pour profits into ETFs and options that track MicroStrategy itself. It's not just investing in Bitcoin anymore. It's about customizing Bitcoin for everyone. And here's the twist. This isn't something an ETF can do. Traditional Bitcoin ETFs just wrap BTC and offer exposure. But MicroStrategy, it's actually replicating an entire layered investment ecosystem around one asset, Bitcoin. It's like BlackRock plays checkers. Saylor, he's playing chess. Let's take Strike, structured Bitcoin preferred shares. You pay $100, but you're only exposed to about $40 in equity. Why? Because you also get an 8% guaranteed dividend, seniority in liquidation, partial upside to MSTR's performance, and less risk, less volatility, more certainty. It's Bitcoin, but with a seatbelt. Which side would you choose? Pure Bitcoin exposure with wild upside? Or a structured, yield-bearing, safer slice of the future? Drop your thoughts in the comments. Like this video if you believe in financial innovation. Share this with someone who still thinks Bitcoin is too risky. And subscribe, because the next wave of Bitcoin finance is just getting started. Michael Saylor isn't selling Bitcoin. He's engineering a parallel financial universe around it. And whether you're a sovereign state, a hedge fund, or just someone tired of inflation, there's finally a Bitcoin product built for you. Let's get more insights from Michael Saylor.
As you can see here on this slide, our company's strategy sits between the crypto economy and the traditional finance economy. So the primary asset and the foundation of the crypto economy is Bitcoin, which is worth $2.3 trillion. And when I think about the crypto economy, I think about every country on earth and every capitalist on earth, 24/7, 365, acting rationally in whatever their economic interest is. That's being manifested on Saturday night, and that's creating extraordinary performance and extraordinary demand to the underlying collateral, which is BTC. However, most of the world is unable to access the crypto economy, and so what we're doing is refining, and we're harnessing the power of the Bitcoin asset, and we're able to actually refine it into low volatility, low leverage, less risky financial products, and then higher volatility, higher leverage financial products. So just like you might refine a barrel of crude oil into kerosene, which would be very, very pure, and asphalt, which is not so much, we're basically providing a function that, say, an ETF cannot provide. You can see IBIT, the most famous example here in this chart. It basically wraps Bitcoin in it, and it serves up a security flavor of raw Bitcoin to the investment community. We, on the other hand, are offering stepped down elements, convertible bonds, convertible preferred stock, senior fixed stock, junior high yield preferred stock, and of course this treasury preferred stock in the form of stretch. We're offering those, and those in essence, we're stripping and modifying the duration of the asset, and we're also stepping down the volatility of the asset, and we're actually extracting the yield from the asset, which is Bitcoin, and we're serving it to each of these fixed income investors. But the excess yield, excess volatility, excess performance that does not go in those fixed income instruments goes into the MSTR common stock. And then, of course, that feeds to the MSTR-based ETFs and the MSTR options. So all of these are different instruments. They're all targeted at a different type of investor. Some of them offer yield.
During Strategy's latest quarterly report, Michael Saylor didn't just talk numbers. He pulled back the curtain on something far bigger. He spoke about a silent revolution, a massive wave of Bitcoin adoption that's sweeping through industries, boardrooms, and even governments faster than most people realize. From macroeconomic shifts to institutional tailwinds, Saylor connects the dots between global instability and Bitcoin's explosive rise. This isn't just market momentum, it's a paradigm shift. Take a listen to how he breaks it down.
A macro overview of the Bitcoin universe. And the first thing that I'll note is we have a very supportive White House, and that started with the establishment of the Bitcoin Strategic Reserve, but it continues across the board. As you can see, we have 12 cabinet members in this administration that are all pro-Bitcoin. A year ago, we had one cabinet member who was neutral and 11 that were indifferent or uninterested and certainly not supportive. So this is a major change in the political landscape. The White House released a crypto policy report. It's about 150 pages long. I did a scan. I'm sure some of you have done a scan. The takeaway is that this administration is going to be very enthusiastic in its support of the entire crypto industry and the Bitcoin ecosystem. And in particular, some of the things they're doing include work in the area of taxation to cure unfair tax treatments of digital assets, and that includes, relief for de minimis digital asset transfers like de minimis Bitcoin payments, and it also includes guidance that digital assets should not be included when calculating CAMT unrealized capital gains taxes or when calculating CAMT minimum taxes. And so we have the support of the administration on this, and that was made very precise in writing just yesterday, and this is an excerpt of it. I think this is just very positive for the entire crypto industry and very positive for Bitcoin, and of course it's very positive for the hundreds of companies that are starting to put crypto assets on their balance sheet. Wall Street's embraced Bitcoin. We've now got, 80 ETFs launched, $170 billion of value flowing into these ETFs. These continue to pick up steam, and they're growing more powerful day by day. Public companies are capitalizing on Bitcoin. This is an extraordinary move, and of course we're seeing these every day. There's a new announcement, whether it's coming from a pure Bitcoin company or whether it's coming from a hybrid or just a random new entrant. But we've now got 950,000 Bitcoin that have been acquired by 160 different listed companies. And if we look at the trend, we were the first in 2020. There were 2 at the end of the year. Then there were 33, 39, 43. There were 64 last year. And of course, as you look at this trend right now, 160 when we're not even to the end of 2025 is extraordinary. So we're in hyper growth or hyper adoption phase for Bitcoin as a treasury reserve asset. Companies are racing to get into the Bitcoin 100. You can see there's even competition to track the Bitcoin 100 right now. And generally, any given week, there are 20 or more companies that are acquiring more Bitcoin. Just a few minutes ago, Coinbase announced that they acquired more Bitcoin this quarter, thousands of Bitcoin. So I see very positive trends here. And each of these companies could, in theory, acquire just as much Bitcoin or attempt to acquire just as much Bitcoin in a dollar value as we have acquired. Obviously, they won't get 3% of the Bitcoin supply, but you can imagine what happens when 100 companies are all competing to acquire as much Bitcoin as possible. The analysts are all starting to cover and track Bitcoin, and they have outlooks for Bitcoin. So if you're going to cover the 160 Bitcoin companies that have Bitcoin on their balance sheet, you're going to have to form an opinion about Bitcoin. And so you can see that the average end of the year price forecast of an equity analyst covering MSTR is 168,000. And so keep that in mind, 168,000 by the end of the year. That's the consensus of the analyst community that tracks our stock right now. Technology investors are looking for the next great thing, and everybody, the consensus trade is AI. Everybody knows AI is the next thing, but now they're starting to realize that Bitcoin is also the next thing, and it's being lumped as a technology transformation and a digital disruption. This is really positive because this is going to draw lots of Magnificent Seven investors into our space. Financial regulators are embracing Bitcoin. You see a new positive Bitcoin announcement just about every other day now from all parts of the government. Just a few days ago, the SEC released a memo allowing in-kind creation and redemption of Bitcoin ETFs. This is a huge deal. This is going to accelerate the development of the industry. They also loosened restrictions on options trading of Bitcoin ETFs. Paul Atkins just gave a speech and made a number of comments about the digital assets industry. It's clear that he's very supportive of innovation, very supportive of the crypto economy, very supportive of your right to self-custody. And this is a welcome development from the SEC. Another welcome development is the guidance that came from William Pulte to Fannie Mae and Freddie Mac, where he said they should prepare their businesses to count cryptocurrency as an asset in a mortgage. This is going to accelerate the institutional adoption of Bitcoin as collateral in the banking industry. There could be no more legitimate driver of the collateralization of credit with Bitcoin than the U.S. Federal Housing Authority. Capitol Hill is embracing Bitcoin. There are 3 bills. One of them, the Genius Act, has already been passed. Clarity is coming in September, and the Bitcoin Act allows for the government to acquire 1 million Bitcoin. These are picking up momentum. This is a positive development. U.S. states are also embracing Bitcoin. We've now got 3 strategic Bitcoin reserves, including one in Texas just recently that was funded with $10 million. So this is a trend that's growing. International governments are enthusiastic about Bitcoin, and we're seeing this everywhere in the world with politicians in Ireland and the UK and Pakistan, in UAE, in Ukraine, etc. All of them making pro-Bitcoin moves. The crypto industry has coalesced around Bitcoin. There used to be some conflict 2-3 years ago. I think the previous administration played the crypto industry against the Bitcoin industry, and now they've come together, and it's pretty clear that Bitcoin is viewed as the foundation of the entire crypto economy. And we see that as really, really constructive for the growth of the entire industry.
And that's a wrap on today's video. Michael Saylor just dropped MicroStrategy's Q2 earnings, and it's not just strong, it's a signal. Bitcoin adoption is no longer a theory. It's happening. Across governments, corporations, and financial institutions, the floodgates are opening, and it's accelerating fast. But here's what we want to know from you. What do you think about the financial products Saylor just unveiled? Would you go for the safer yield-bearing options like Strike, or are you all in on the high volatility upside of MSTR? Let's get the conversation started in the comments. And if you found value in today's breakdown, like the video, share it with someone who needs to see what's coming, subscribe if you haven't already, and hit the bell so you don't miss the next wave of crypto transformation. Until next time, stay sharp, stay curious, and stay ahead of the herd.